Hello everyone, this is Ahmed Al here with you and welcome to another training video with Forex Trading Signal. In this video guys, we're gonna go to discuss a strategy and how to make appropriate risk management and how you're gonna go to make an appropriate and action plan for your long-term trade. So we will be focusing on making a strategy, how to make a strategy, and who are you within this strategy. And we're gonna go to discuss how you can manage your risk, and we will discuss how to create a plan for your long-term trade plan. We are speaking about long-term trade plan, and we're gonna go to make sure that you are understanding how you're gonna go to make your trading checklist. So this video will be very important video for you guys and will be one of the best videos we have created in our channel. So before starting, please smash the like button. If you have not subscribed to our channel yet, please go and subscribe to our channel and share this content with your friend and with the community so we can achieve more community and we can all get the benefit of this video and to let us continue making good training for you and good videos in the future. So stay with us please, we will start in a moment. So first of all, guys, as usual, if you see a blue candle here, that is buy candle. If you see a red candle here, that is a sell candle. So first thing we're gonna go to do, we will understand what does strategy mean. To understand what does strategy mean, first of all, we're gonna go to explain what is the strategy. To understand our training fully, we're gonna go to understand what does strategy mean. So strategy mean it's your way of trading in the forex market, and that trading is for the purpose of you increasing your profit or achieving your goals, your target. So that is what does strategy mean. So all of us, we are trading to gain profit or to achieve our target or to grow our capitals and improve our wealth. So next thing we're gonna go to discuss, it is you within the strategy or the system of trading. So you as a human or as a trader, we're gonna go to discuss you within the strategy or within the system. So first thing to do, and it's very important, you got to learn technical analysis and fundamental analysis. So first thing, before starting your strategy, you need to learn fundamental and technical analysis. If you don't learn technical and fundamental analysis, your strategy will fail because that is the base, that is the baseline or the foundation for trading Forex. Second thing, you're gonna go to know about your risk management. How do I apply my risk management according to my trading account size and according to the market situation and according to the fundamental analysis and the technical analysis, and we will emphasize on this in a bit detail in a while. So third thing which you need to know, it is how to create a checklist and how to create a trading plan and how to create your risk management plan. So you're gonna go to create a trading plan, and within that trading plan, you're gonna go to plug your risk management plan plus your checklist for trading. So don't worry. If you don't know how to do this, it is a simple thing. You can follow and you can do, then you can apply this without learning them or while the process of the learning, while the journey of your learning. So while I am learning, what I can do to cover those three things, I can follow a mentor. So simply, I need to have someone to analyze the chart for me and to give me the fundamental analysis and to give me direction of the buy and sell. So in this case, this mentor, he will provide you some services. By the way, in our FX Trading Signal Prime, we are providing on our channel this type of service. So we provide you the technical analysis. So if you go and check our Telegram channel on daily basis, we provide you videos for technical analysis and we provide you videos for the fundamental analysis and we give you the direction of the price and we are specialists on the gold. Only the gold. We don't trade bears and I will emphasize on this later on. Second thing, what does the mentor do for you? He is going to train you. And this is what we are doing now in this training. We are training you. Why we want to train you? Because we want you to become a better trader. And also, we're gonna go to advise you when you are questioning or when you are having any clarification. So you got to know that we are available for you 24 hours, 7 days in a week, and we will be able to support you whenever you have a doubt or clarification, and the answer will be immediately like a flash. So third thing, what we can do for you or what the mentor can do for you if it's not us, we can create your risk management plan and we can create your trading plan and we can create your checklist plan. So those things, all those things, if you don't know them and if you are still learning them, you don't need to risk yourself. You just need to follow mentor and the mentor will provide you all those things. Then based on that, you're gonna go to create your trading plan. And now in this video, I'm going to show you how we can give an example to create a trading plan for long-term trading. So how to make long-term trading plan? So to create the trading plan, you need to have a chart to analyze it, and that is everybody's having. And you have to have your account open with your broker. And let's say, for example, that I have $1,000 account. So now I have a daily chart here. This is daily time frame and this is daily chart, let's say. And I want to trade on daily basis for long term. So I'm now going to create plan for me and you. So first I got to choose my chart. So I am going to sell the highs and buy the lows on the daily time frame. This is what I'm planning to do. So this is number one. So second, I need to identify the economy status. Where is the suggestion for the direction for the economy status? So this is if you are not able to identify, your mentor will provide you that. So third thing, we're gonna go to identify the technical status, whether the technical suggests down or uptrend. So to emphasize more, we said before, if you don't know how to do the analysis and identify the direction, whether it's uptrend or downtrend for the long term, and you don't know anything about fundamental, you just got to come back to your mentor or to us and ask and clarify the questions. So we're going to go to provide you all the feedback. So four, you got to do your risk management. So if I have an account of $1,000, I want to maximize my trading opportunity. So if I have account of $1,000 and I want to trade only $5 out of the $1,000, that means you are not optimizing your capital ability or capability. So for me, always I use 50% from my total account as a risk management. So I use 50% from my account, and if I multiply $1,000 by 50%, I will be end up by having $500. So if I have $1,000 account, I'm going to use $500 to trade in the market. So I'm going to use 50% out of my capital for the long term. And be careful, this is for long term and it is not for scalping. Scalping, you cannot do that. All right. Next thing I'm going to do, point number 5, I'm going to calculate how I am going to trade these 500. So I cannot open two standards within 500 and wait the price to go up and down, and then I will be having drawdown and I will lose all my money. So no, that is not the way. You're gonna go to divide these 500 and you're gonna go to do the calculation for the risk management for these 500. So if I take $500 from my account, the 50%, and I am going to risk that amount of money. So you have to keep this concept in your mind. When you are trading, we don't think about the profit first, we think about the loss first. So I am going to risk $500 for long term. However, I want to long last in my trading and I want to succeed. So I'm going to do the management for those $500. So what I will do, let's do small calculation and understand what does these 500 mean, and if I want to lose $500, what are the appropriate size and how to divide the sizes and apply them properly. So the thing that I am going to do here, I'm going to take $500 and I will go first to calculate when I open one position, and that position will be 0.01 lot. So if I open 0.01 lot, if the market moves 1 pip, then I am profiting or losing 1 cent. However, $500 loss on 0.01 lot will be $500 movement, which is 50,000 pip. So if I open 0.01 lot, when the market moves 50,000 pip or $500, that is the time where I will be consuming these $500 fully. So after the market moves against me in one direction, $500, that is the time where I will be losing the full $500. However, if I open 0.02 lots, that movement of 500 will become less because 0.02 is not the same now, it's duplicated. So to lose $500, the market has to move $250 in the price. So with 0.02 lots, so I can lose $500. All right. So now you get to know by increasing the size, you are shrinking or decreasing the gap, the area from your stop loss and the entry. So now if I want to make an appropriate trading plan for the $500, which is the 50% of my account, I'm going to do the following. So guess that I want to open an entry after analyzing the chart technically and after analyzing the economy status and after asking my mentor said for me, okay, the price is going down. So I'm going to wait an entry from the higher price for sell or from the lower price for buy. So what I'm going to do, I am going also to add a position, and I have decided to leave gap between my first position and second position and third position and so on. So I want to know how many position I can open using the $500. So if I decide to take a gap of $20, I got to calculate how many position I can open to lose $500 when I am trading with gap $20 movement in the market. So I am going to divide 500 by $20, and that will give me 25 positions of 0.01. So I will be able, if the market at the high or at the low, after that entry, first entry, I will be able to trade or to open 25 position using that $500. So you see how you're gonna go to create the sizing of your trading and how to create the plan for the sizing and the risk management. Now I can also trade with 0.02 lots, but however, this time will be gapless because we decided if I want to lose $500, I am going to divide that by 2 because it's no more 0.01, it's now 0.02, and that is considered the double of the risk. So if I remain with $500 movement, I will be losing $1,000. However, now if I want to open 0.02, that means the gap will be $250. $250 movement. So that is the way I'm going to trade. So if I want to calculate that, I will be dividing first 500 by 2. That is because I'm using 0.02 lots. And after that, this result will be $250. And if I decide to trade a gap between my first entry and the other entries of $20, I am going to divide the $250 for the gap. Then I will be end up having a 12.5 position. So how I can trade 12.5? So 5, it's the half of the 0.02. So I can place my first order 0.01 and the remaining 12 orders of 0.02. So this is how you're gonna go to size your trade. And of course, your stop loss will be the $500, but I will give you a trading management and risk management. So also you can apply this without stop loss as well, because you're gonna go to build your account progressively while trading one direction. So the next thing you're gonna go to do, it's your strategy or your risk management when you achieve 50% of your risk. So we said your risk is $500 from your $1,000 capital account. So we said that your risk is 50% from that $500, which is half of your capital, half of the $1,000. So if we reach in one direction, draw down 50%, that is $250 in one direction, then you're gonna go to trade other direction with duplicating the size, of course, from the low or of the high against that direction which you have done first. So when you reach to 50% from your risk, so your risk is 500, so 50% of your risk is $250 movement. When you reach that, you're gonna go to start to trade other way, because you're gonna go to realize that market is not stopping on that direction and it's going against you. So you're gonna go to build your account, and I will tell you how to manage this. This is how to plan your trade. So when you reach your 100% on one direction, what I'm going to do, I'm going to hold some position for my reverse direction, and I am going to hold them for long take profit so I can build up my account again. And this is according to your plan and your risk management. So I'm going to hold some position on the other direction, and I will do have a plan for them. So I'm going to hold some position on that direction for long term until I achieve technical level. Then I can also build my account progressively. Number 11 is to have you increasing the size of your trading plan incrementally by 0.01 when you achieve 150% profit. So if I have account of $1,000, I need to achieve 150% from my account. That means your account has to become $2,500. Then I can increase the size for my trading plan. I will keep the same position, the same plan, the same gap, but however, I will increase the size of my trading plan. Let's say I was trading 25 position with 0.01. I will start to double the size to 0.02 for 25 position with the same gap and the same plan. Next thing you're gonna go to do, it's your take profit. When you have more than one trade open, always break even the two trade in the middle. Zero loss, zero profit. You don't need to have profit, you don't need to have loss. I have two trade open, close them and start another trade. Why? This will minimize the drawdown of your capital. So if I have open the trade 0.01 and I am waiting gap of $20 and I have opened another trade, close them in the middle. Don't wait to take profit from the first entry because the price might not come back to the first entry. So what we are doing here, we are going to close the two trade or the three trade or the four trade or the five trade or the six trade or the seven trade in the middle of those positions. So I have had price of $2,000 and I have reached, let's say, $2,050. I'm going to break even the two position on $2,025 in the middle. So why we need to do this? Because we don't want in the fact to trade more than one position in the fact. But however, why we are trading more than one position? Because we are long-term trader and we want always to make our risk to the lowest risk. So next thing you're gonna go to do, it's the break even, and always the break even has to be 51% of your gap. 51%. So if I am selling, my first position is here, my second position is here, $2,000, then second position $2,050, I'm going to break them $2,024. 51% below the middle only by 1%. Why we need to do this? Because there is a spread, you're gonna go to lose it, and there is also commission for the broker, you're gonna go to lose it. So 51% break even in the middle, you will be coming zero without any profit, without any loss, and you're gonna go to start your plan from the beginning. Again, this will make you safe, will not make an issue for you. Next thing you're gonna go to do immediately when you place your first order, and your first order should be the best order in your plan because the remaining orders depends only on the gap. So your first entry is the one critical. It has to be on technical analysis, on support resistance level. Use your mentor advice, ask your mentor, clarify with him what is the direction, clarify with him what is the status of the fundamental and what is your advice. Then after that, you go for that level and enter your first entry and you start to build in that entry. And you start build on that entry every $20 gap. Don't forget to set up your trading take profit and your trading orders and your trading stop buy limits and your stop loss and take profit. And to explain this now practically, I just want to show you how you can trade long term. I'm going to sell the highs. So you can see I can sell here and I can build position. I can sell here, I can sell here, I can sell here, I can sell here, and I can sell here, and I can sell here. On daily basis, each candle has made for me profit. Each candle has made for me profit on daily basis. There are situations you will be having two candles like this, but however, those candles will bring you the 50% and more than that. Okay. However, I'm going to sell the highs and I'm going to buy the lows. So if I want to practically tell you what I'm discussing here, I'm going to show you an entry sell here, then the gap of $20 here, market gone against me, then another sell entry, then gap $20, then another sell entry, then gap $20, then another sell entry. So this is what I mean. So you keep gap of $20 and you apply, calculate your risk, how much you want to lose and how much you want to use from your capital, and divide that capital into the gap you want to apply. And based on the gap you want to apply, identify how many position and you go for that positioning after making sure that you are having the best entry. So if you see here, we have sold the high of the previous day. However, the price gone against us, let's say, and we have sold the price after gap of $20 and we have continued to go up and we have built this. Same thing you're gonna go to apply for the buy as well in the same direction. So if I sold from this line, I can also buy from this line. So when it's going on the high, I am selling. When it's going on the low, I am buying. So this is my long-term plan. So it's very simple, guys. Okay. So you don't need to trade sell from here. And you don't need to trade buy from here. This is a big mistake. This is a big mistake if you are having trading plan. Unless otherwise, if you have a breakout, you got to wait the breakout until it is going to test this trend line, and I'm going now to sell the previous high for the daily chart. So this is now our daily chart, the previous high coming next week. So I'm going, the moment the price reaches here, I'm going to sell this. And I'm going to apply the $20 gap until I reach $500. Okay. And I'm going also, if it's going down, I'm going to buy this low. So I'm going to buy this and I'm going to apply the $20 gap as well. So you see, I'm going both directions, long term. But however, the long-term trade, it depends on how you're gonna go to use your capital for long trade with the direction. All right. So next thing I want to explain to you here is the B. Don't forget the B, the break even. The moment you start to have two position open, immediately place B. You don't need to trade more than one position. If that started to build your position, make sure that you are breaking them 51%. Don't be aggressive and close the first trade and leave the lower trade. Don't do that. Khalas, you have had more than one position. You put break even for the two position, three position or four position, and wait that break even to happen. Otherwise, you continue to build your gap with the positioning until you have that break even done. And if you look here, guys, none of the trade, if you are trading this way, none of the trade will be loose. And this is how I have built my account. This is how I made from April 2022 until now a $20,000 on this trading plan. So now my advice to you, my request to you, if you are going to trade long term, do not trade more than one pair. Because guys, this is not beneficial. This is not going to help you. Trading euro, gold, sterling dollar, Australian dollar, Swiss currency, Japanese yen, and whatever will not make you successful trader. This is will fail you. I will ask you one question. Which one is the best? Is to have one pair and you master it and understand everything about it, or you have 10 pairs and you don't know how to think about them and what is going to happen if one affects the others. So if you are struggling with the technical analysis already and the fundamental analysis, why you want to go for 1,000 pair? If you have two plans, scalping plan and long-term trading plan, you're gonna go to be busy only with one pair, positioning your long-term plan and scalping the same one. And you're gonna go to use your hedge margin. Your hedge margin is very important. Your hedge margin is very important. If I trade multiple currencies, I need for each currency a specific hedge margin, a specific amount of money to use it for that currency. So if I am trading gold, I'm going to pay $18. If I am trading Japanese yen, I'm going to pay there $5. So if I am trading Euro USD, I'm going to pay $10. So those margin is taken from your account and it is reducing your ability to use that money on one pair and utilize your money in a proper way so you increase your risk management. You make your risk management long lasting. So that is very important, guys. Another benefit if you are trading only one pair, and for me, I am trading only gold. I was trading 15 pairs of currencies, including the gold, and I have stopped doing that because it's useless. If I am trading only the gold or only one pair, I'm going to master that technically. I'm going to master that fundamentally. And I'm going to use my hedge margin when I trade sell 0.01 and I am using $18 for that. When I trade buy against that 0.01, my used margin will become zero. Of course, if you are trading with appropriate broker, he give you the hedge margin is zero. Hedge margin zero means that if you open one position sell and if you open one position buy, we are not going to use from your money any money. It will be zero. So you will be able to trade two positions without reducing your money, without reducing your capital. That is another benefit of trading one pair. The gold important. Why? Because it is highly volatile pair. It is moving too much, and this is what we want. We want pair moving too much. So now I don't want to divert the topic. However, this is my advice to you. Now I am going to tell you how you can make your checklist. So now we discussed these and we said how to trade buy and how to trade sell and how to manage your risk and how to create your management plan according to your size and according to what you want to trade. You can trade 4-hour time frame and you can trade daily time frame. And if you want to go longer, you can trade weekly time frame. And if you want to go longer, if you are too much busy, you can go for 1 month time frame. Don't go for the 1 minute and the 5 minutes and the 15 minutes. That is for scalping. Now, the checklist plan. So, first thing, I'm going to create my checklist. And my checklist should be according to my trading plan. So, the first thing I'm going to do, I'm going to open an entry. Let's say sell from the high. So I will say for myself, I will ask, create checklist, make a paper and create your checklist for your trading. Yes, this is a business like any business. Did I choose the direction based on the economy analysis? Or did I ask my mentor, what is the economy status? Yes, I have asked, good. No, I didn't, bad. Bad is not good. Second thing, did I choose my direction based on technical analysis? Or did I ask my mentor, what is the status technically now? If I done that, yes, it is good. If you didn't do that, it is bad. It is not good. You are gambling. Now, for the first entry, you got to ask yourself, did the price technically achieve the expected area? The expected area is the high. Do I need to sell from here? Why? I'm going to wait the high. Did it achieve? If the price is trending up, My point will be the previous day high. From the previous day high, I'm going to sell and I will place my 25 position after that. So that is the first entry and everything about the first entry. And after that, you're gonna go to depends on the gap. So gap at $20, sell. Gap at $20, sell. Gap at $20, sell. Until it reach the sky, then finally it will go down like waterfall. So for the other entries, you're gonna go to ask yourself, did I achieve the gap of $20? Yes is good, no bad. So to increase the other direction size, you're gonna go to ask yourself, did the trades achieve 25% of my risk, of my capital? If it's achieved, yes, good to go. If it's not achieved, don't do. Don't increase. Bad. So number 6, does the news supporting my direction? If it's supporting my direction, yes, it is good. Good to go. If it is not supporting my direction, if I am expecting the news and that news, I don't know what is going to happen, why you want to trade? It is bad because you don't know or ask your mentor. For the increment of the other direction, did the trade direction reach the 25% of the capital? We have said that. I believe it's repeated. Sorry for that. Yes is good. No bad. To hold the trades, did the price achieve 50% of your capital? If yes, go for the holding trade. And if no, do not hold the trade. This is the way I'm going to create my checklist based on my action plan. I have to write my action plan and I have to understand how I am going to trade that action plan. It's not just gambling, clicking. I can see people just clicking. That is not good. This is business like any other business. You have to have a plan for it. Now, risk for your account, and I want to emphasize on this one because this one, most of the people, they don't know it, they are not aware about it, and they are putting themselves in risk, in very high risk, without knowing, and people, they are fooling them. So that's why I want to emphasize about your account risk management. So first of all, I want to explain you within the system, and the system is you, the international market, and the broker you deal with, and the system you use. You got to know them. You got to know them. So you are sitting here. You are called retail trader. Me and you, we are retail traders. We are trading with a small amount of money to create small profit, and they call us retail trader. We are not the institutions. We are not the hedge fund. And we are not the big banks, the central banks. We are not these three. We are retail trader. We are small traders within the world of trading system. So everybody can see our positions and can understand how many positions we have open and how many positions we have closed and how many sell and how many buy. And why they know this? Because we are taking buy and sell from them, from the brokers and from the institution and from the central bank and from the international market. So you are sitting here, you are clicking on your chart or mobile or your laptop, and you are trying to make order. You're gonna go to make order, sell or buy. So now your order is getting executed using the Metatrader or a software for trading. That software will be provided by your broker. So the Metatrader is general software, and the broker, he has subscribed to that software and he is giving it to you as a service. So what he do, he take that, he buy that software and he put his logo on it and he give you that as a service when you open an account with him. So when you use the MetaTrader, you are using an external software subscribed by your broker, created by your broker, bought by your broker, and he is providing you as a service. providing you the software to download it, and you're gonna go to use it to place an order in the market. So when you click and you open order, you are opening through the Metatrader or the trading software which he is providing you. There are so many other trading software, but the famous one is the Metatrader. So you're gonna go to click, order goes to the Metatrader. The Metatrader will go and give the order to the broker. So the broker here is having an aggregation system, and the aggregation system is connected to the international market, and the international market having all the central banks and having the market, the Sydney market, the Tokyo market, the EU market, and the US market. So when you open an order, it goes to the MetaTrader, and the MetaTrader transfer it to the aggregation system of the broker, Euro broker, the one you have opened an account with him, and also the aggregation system of the broker is connected to the market. So now imagine that you have given an order to the MetaTrader to buy 1 ounce of gold, for example, and that goes to the aggregation system of the broker, and the aggregation system of the broker is connected to the market. What does the aggregation system do? It's going to the market and it is searching for the best price in the market and collecting that price and giving it to the broker when you and the broker place an order. So now order gone, MetaTrader, aggregation system, select the best price, and let's guess that the best price came from the market. It is $2,000 per ounce, for example. Now this price will go to the broker. Now if your broker is market maker, listen to this and put it in your mind. If your broker is market maker, what he will do, he gonna go to take the order from the market, the best price from the market, and he gonna go to mark up amount of money on your order. So if you are trading sell, he gives you lower price. Instead of giving you $2,000, he give you $1,999 if you are selling. So he's reducing $1. So if you are going to go buy, he is giving you additional dollar. So instead of giving you $2,000, he gonna go to give you $2,001. So now you can see that the broker, if he is market maker, he gonna go to mark up amount of money on your price, on the price coming from the market and giving it to you. So he will pass it to you and you will be opening your order, but your order is already losing money from the price. So now in this case, if you open sell and the direction of the gold goes with you, you're gonna go to profit from his money. Because the moment, let's say it's reaching 1998, you're gonna go to close and you're gonna go to give him back $1998. So he's in this case losing $1. So there was no profit from him. However, you win, and he doesn't want that to happen. So if you go for 1997, he's gonna go to lose from his pocket, because the moment you close, you return back to him $1997. He will be losing $2. If it goes down, he will be losing more. So what he need you to do? He need you to lose your money. When you open sell, he need the price to go up. So what he will do? He will start to increase the spread so you can hit your stop loss fast. Similarly, if you are applying buy, he gonna go to mark up $1. And if the price goes with you, he gonna go to lose his money. If the price goes against you, he already marked up $1 and he gonna go to apply swap and he gonna go to apply fees and he gonna go to open the price to close you early on loss. So this is not good. This type of a broker not good. So let's see what is happening when you are connected directly to the market without this guy entertaining your trade. So you're gonna go to open your order in the ECN type of broker, different type, not the market maker. We call them dealing desk, the market maker. The non-dealing desk, those are the ECN brokers. By the way, ECN can be ECN and dealing desk, but if your broker is doing both, no issues with that, but make sure your account is ECN, not market maker, not dealing desk. Okay, so you tell your broker, I want ECN, and you will see big differences, and they will start to negotiate with you. No, we don't give you ECN, and so on. For me, I have ECN, and whoever is coming and joining me with my broker, I am making sure that his account is ECN account. So in the ECN situation, let's discuss what is going to happen. You open your order in your mobile, in your Metatrader or your laptop. The order goes to the Metatrader. The Metatrader is sending it to the aggregation system of the broker, and the aggregation system is connected to the market. So he selected the best price, and he directly given the price to you. So it is $2,000 here. The aggregation system will get that $2,000 and he will give you the order, the same price, and that price will be the same whether it's buy or sell. So the market is having $2,000 price, and the aggregation system will straight away give you that order. So first of all, what is the benefits? First of all, this is when the aggregation system, when you deal with the aggregation system directly, your execution for the order will not be delayed. It will be immediately and in instant. So you don't have any issue with that. So the price is 2000. We give you direct the 2000. So what is the benefit now of the broker? The broker will mark up a small amount of commission out of that trade. So if you profit dollar, he gonna go to take 10 cents. If you lose dollar, he gonna go to take 10 cents. So when you open trade, because of these services which he is providing to you, he is connecting you to his aggregation system, and he is connecting you to the market, and he is not entertaining your trade, and he is giving you the lowest spread. He gonna go to take from you commission for that service, and this is what we want. Because this guy, when he takes small commission amount of money, now to increase his money, he want more commissions, so he want you to trade more, so he will make sure that you are successful. Because if you lose your money, you are not trading with him, then he gonna go to lose his commission. Then what he will do, he will train you, he will make sure you are good, he will make sure you are in profit to continue take his small position, and he will connect you to the market. And that is what we want, guys. That is what we want. So don't trade with the rubbish brokers, the dealing desk. You come, join us, and trade with us on the ECN account. And if you are using that, you will be good to go. And this is part of your risk management, because when you deal with dealing desk, market maker, broker, your trade is not in your hand. Your trade in your broker hand. He gonna go to close it whenever he like to close. So now, ECN account. How does the good account look like? I will tell you how does the good account look like. And I want you to ask your mentor. Ask me, guys, clarify. I am open for clarification. I am open for question, and I am honest with everybody. And I want you to trade properly. So first of all, make sure your count is ECN. Why? Because it doesn't have slippage, doesn't have spread open and close. And you are connected directly to the world, to the international market. And your broker doesn't entertain your trade at all. He's happy if you are trading and profiting. Second thing, make sure the minimum leverage is 1 to 200. More than that is not important, because the leverage It's high risk more than giving you profit. It's high risk. Why? Because if you are still at the beginning, you don't know how to use the leverage, you're gonna go to lose your amount in a second. So you open two lots in $500 account, 2 seconds, your account is finished. You don't know what has happened. The market against me. The broker, he killed me. No, you don't know what you are doing. Okay, so make sure the leverage is 1 to 200. And if it's more than that, it's not important. Why we need the leverage? Because when we put small amount of money, that amount doesn't buy 1 ounce of gold. So we want to multiply it by 200 to be able to buy that 1 ounce of gold. And we don't want to trade 1 ounce of gold, one lot. We want to trade 1% of that lot, like one lot divided by 100. That is what we want to trade. Because we have a small amount of money. $1,000 doesn't trade lots. So make sure that your margin hedge on your account is zero. What does it mean? When you open sell and when you open buy, you're gonna go to use zero amount of money for these two trades because they are against each other. So if I pay $18 for sell and I pay $18 for buy, 18 sell minus 18 buy is zero. That is your margin used. Okay, so this is the hedge margin. This has to be zero. If your account on the other broker is 50% or 25% or 70%, that is rubbish. Throw the account. So make sure the stop level of your account from 0 to 10 bips. If it's more than 10 bips, stop level, the stop loss, that means when you place your order, when the market moves in your favor 10 bips, you're gonna go to place your stop loss on profit. If the account doesn't do that, your account is rubbish. So last thing, make sure your swap fees is zero. If your account is having swap fees, you can contact your broker and tell him, I don't want account with a swap. Okay, the ECN account, the account which I'm doing, having all those things, the leverage is from 1 to 400, the hedge margin is zero, and the stop level is 10 maximum, and the swap is a free swap. The swap is amount of money is being taken from your account every Wednesday. So if you have long term trade and you are trading for long, okay, and you are keeping your trade for 3 weeks, 4 weeks, you are already losing money on that trade using the swap fees. So the last thing you're gonna go to make sure that your variable spread doesn't exceed the 75 pips in the worst case scenario. So in our account doesn't use 75 pips. So at the end, guys, if you have any clarification about ECN dealing disk and no dealing disk, and you have any question about it, you ask me. I have full information about it, and I can advise you who's the best broker and who's the rubbish broker. So finally, guys, if you like this video, please smash the like button and subscribe to our channel and share this video with your friend to approach maximum community. You are getting the training free, so you support me on sharing these videos with your friend and the community, so we have bigger community and the benefit will be distributing among everybody. So thank you very much for watching this video and see you in next training video.